All right, talking about Skyworks today, SWKS. Earnings came out Thursday, and stock was down on Friday about 8%. It's down another 2% today. I think it's a mistake. I think it's an opportunity. So why should we be buying these shares? First of all, let's talk about what they do. They make components for cell phones, Internet of Things, a chip company. Um, their big customer is Apple, 53% of their revenue. I think it's 53, it's pretty close to that. 70% of their revenue is in mobile phones. Other customers are Xiao, Xiaomi, do I say that right? And Samsung. So those are giants in the cell phone industry. And every generation of phones, they just get a little bit more and a little bit more. They're up to like $25 a phone now. It used to be $3, in every generation, like, 1G, 2G, 3G, up to 5G. They're getting like $25 a phone now. Um, Great brands that they're associated with. They're also Internet of Things. So infrastructure, anything that would need to be connected now or in the future. Automotive, they made a nice little acquisition of Silicon Labs. Let's be clear about it. They didn't buy Silicon Labs outright. They bought a business unit of Silicon Labs, which was infrastructure and automotive. So they want to be in that space as well, which they're already in, but this gives them a bigger foothold into it. Um, what else can we say? Super clean balance sheet. The earnings, of course, the earnings estimates. It was a small beat, a modest beat. I think some of the language was used for some of the press. Um, Revenue was up 53%. Now, it's only a modest beat of, beating the 53% growth. So it was baked in a little bit. Okay, fine. Still 53% growth. You can't take that away from them. They guided for 49% growth in the next quarter. I mean, I don't know what else you can ask for. And it doesn't even look that expensive to me. I mean, the only thing I can think of why it's down is, it ran up a little bit into earnings. We had a lot of companies, not just Skyworks, report a really good quarter and even a beat, beat revenue, beat earnings, raised guidance, and some shares came off. And you saw some of the giants last week, fabulous reports, Facebook, Apple, Google, Amazon, you name it, they were all good. And some of the shares were a little bit soft. So I think it's just getting caught up in that. But this is a fantastic company, and I would say take advantage. Let's take a quick look in our model. Good return on capital history there. You see ramping up from, around back to 2002 is our very first piece of data there, and just kept getting better and better up to about 2017. Came off a little bit as that was kind of the 4G wind down, and then now we're starting the 5G, and you see bottomed out in they got a September year end, so it's a little bit funny the data in terms of the timing, but September 2020 was kind of the bottom. Now you see it ramping up. We have the December quarter in here. We don't yet have the next quarter, but it's going to look even better. I know that just by reading the press release, and it already looks good. So you can see, our valuation says it's higher, or it's a very normalized forecast. This isn't a super aggressive forecast or anything like that. High quality company though. I mean, I really just have a lot of good things to say. I mean, what else can you ask for? Small beat. Would have been nice to have a big beat, but whatever. Small beat is beat. Beat's a beat. Tremendous revenue growth, profitable, high return on capital. I forgot to mention how good their balance sheet is. There's barely any debt. They could actually lever up a little bit. Lots of cash on their balance sheet. I mean, really everything you could ask for. Enough said. Skyworks SWKS on NASDAQ. Take advantage of this pullback.